Hey everyone, welcome to this explainer on the great realignment of 2026. Look, the rules of technology and gaming are quite literally being rewritten overnight, and as we dig into these events, the sheer volume of paradigm-shifting news is absolutely staggering. Let's uncover exactly what is happening out there. Today, we're going to track how a chaotic wave of news from mid-June actually paints a highly cohesive picture. We'll be walking through the fall of the walled garden, looking at the democratized ecosystem, diving into the institutional frontier, and finally mapping out this new reality. Let's jump right in. Let's kick things off with Section 1, the fall of the walled garden. And we really have to start with the massive identity crisis that's currently tearing through Xbox. It all comes down to this brutal calculus. PlayStation 5 has sold 65 million units, Xbox just 30 million. That's a massive 2-to-1 deficit. What does that actually mean? Well, it means the traditional platform war is effectively lost for Microsoft. The hardware numbers just aren't theirs to sustain their old way of doing business. So how do you react to a deficit like that and keep your shareholders happy? You pivot. Aggressively. Microsoft is transitioning from a platform holder to a multi-platform publisher. But man, there is a heavy cost here. They're essentially cannibalizing their own acclaimed studios. Creative powerhouses like Ninja Theory and Double Fine are in active negotiations right now just to avoid being shut down. That puts over 300 jobs at risk, all to prioritize massive AAA blockbusters. Just look at the whiplash over these last few weeks. In early May, they close Arcane and Tango. By June 8th, they're generating massive hype during their community showcase. Everything looks great, right? But then, literally 1 week later, reports drop that studios are at risk again. And by June 16th, Ninja Theory's closure is imminent. It's a stunningly fast transformation from being the gamer's best friend to a profit-first monolith. And this aggressive drive for profit leads to something that would have been totally unthinkable just a few years ago. Halo campaign Evolved is launching on the PlayStation 5. Master Chief, the ultimate Xbox mascot, on a Sony console. Sure, tapping into PlayStation's 120 million install base could bring in $500 million, but it forces us to ask a really uncomfortable question. If Xbox games are suddenly everywhere, why would you ever buy an Xbox console again? Now, contrast all that chaos with Nintendo's quiet excellence. In their recent Switch update, they aren't chasing headlines or shutting down studios. They're just securing long-term loyalty. We're talking simple, compounding upgrades. Things like language expansion, a faster eShop, simple PIN verification for parents. It's honestly a masterclass in how you maintain dominance by actually focusing on your core users. All right, let's move on to Section 2, the democratized ecosystem. Stepping away from gaming, let's look at how Apple is tearing down its own hardware barriers. For years, if you wanted advanced fitness tracking, the conventional wisdom was that you absolutely needed a smartwatch. But with the release of iOS 27, Apple is forcing us to completely rethink that assumption. Do you actually need a watch anymore? Let's break down the mechanics here, because it's fascinating. By extending their gym kit protocol, Apple has created this brilliant workaround. Picture walking into a gym, you just tap your iPhone to the treadmill, your AirPods automatically read your heart rate right from your ear, and that data is beamed directly to the machine. Your iPhone suddenly becomes the mirror display. You get this totally seamless data exchange, and your wrist is completely bare. This is a classic modular upsell strategy. The Apple Watch, that remains the premium, glanceable experience. But this new iPhone and AirPods combo gives casual gym-goers an incredible entry point into the health ecosystem for just $249. It perfectly positions Apple to aggressively capture users from competitors like Fitbit and Garmin, and they didn't even have to manufacture a cheap new fitness tracker to do it. Moving on to Section 3, the institutional frontier. We're pivoting to the macro level now, where frontier tech is having a pretty violent collision with government regulation. This whole situation reads like an unprecedented geopolitical thriller. Just watch how fast this moved. Anthropic launches their highly anticipated Fable 5 AI on June 9th. Within 48 hours, researchers jailbreak it to generate malware. By the morning of June 12th, Amazon alerts the White House. And by that evening, the U.S. Commerce Department forces a global shutdown. That is 3 days from launch to a total blackout. Looking objectively at the facts here, this crisis sets some severe new precedents. AI models are now essentially being treated like weapon systems. Governments have definitively proven they can force post-release revocations. And because tech companies can't perfectly geofence their users, export controls inevitably lead to global blackouts. The old Silicon Valley mantra of move fast and break things? Yeah, That is officially dead when it comes to AI. This new reality leaves the industry facing massive, unexpected downtime and broken integrations. It also creates a terrifying chilling effect for developers. The big question is, if a multi-billion-dollar investment can be pulled offline overnight by an executive order, who is going to risk investing billions more into frontier research? But here's where things get really interesting. While governments are locking down artificial intelligence, Wall Street is shockingly moving in the exact opposite direction, toward decentralized finance. Standard Chartered, a megabank, just initiated coverage on Uniswap. Their projection? They predict the Uni token could climb from $6.50 today all the way to $100 by 2030. That is a staggering 4,000% projected increase, completely backed by institutional capital. The why behind that bold prediction is what's truly fascinating. Even when you factor in crypto's extreme volatility, this 9-figure price target validates DeFi as a legitimate long-term asset class for institutions. They're projecting total value lock to hit $2.7 trillion as traditional finance tokenizes real-world assets, like your stocks and bonds, directly on-chain. Traditional banks are basically holding up a neon sign saying decentralized infrastructure is the future. Which brings us to Section 4, the new reality. Let's bring all these threads together, because the connective tissue of this overnight realignment across multiple industries is super clear. Whether it's Xbox sacrificing its sacred exclusivity just to survive, Apple decentralizing its health tech to capture casual users, or Wall Street adopting crypto while governments literally shut down AI, the old walls are entirely gone. The boundaries that defined the last decade of our technology have been permanently erased. The future really is this constant negotiation between disruption, regulation, and survival. And that leaves us with one final vital question to ponder. In this deeply realigned tech landscape where multi-billion-dollar companies are bowing to survival instincts and heavy regulation, who is truly in control of our digital future? Is it the innovators, the traditional institutions, or the governments? Keep a close eye on this, because what happens next is going to rewrite the rules for all of us.